Imagine an economy so massive it could buy every tech company on Earth, 5 times over. Apple, Google, Microsoft, Amazon, Tesla, all of them, 5 times. And you have never heard of it. Right now, $10 trillion is moving through a global financial system that has no rules, no oversight, no safety net. Your bank doesn't know about it. Your government can't control it, and if it collapses tomorrow, your savings go with it. This is not a theory. This is happening right now. Today, while you sleep. Before we get into this, did you know shadow banking existed before this video? Drop your answer in the comments. I read every single one. If this already sounds insane, hit like and subscribe. Because what comes next is even more terrifying. And share this with someone who thinks their money is safe, because after this video, they will think twice. Stay with me until the end, because what is hiding inside this $10 trillion shadow economy will change how you see money, banks, and your own financial future forever. Section 1, The Invisible Giant. Let's start with the basics. What is shadow banking? Simple. It is a parallel financial system running right next to your normal bank. Same functions, same money, same power, but with zero regulation, zero oversight, zero safety net. Think of it this way. Your regular bank has rules. Government watches it. Central banks monitor it. Regulators audit it. If your bank takes too much risk, someone steps in. Shadow banks have none of that. No regulator watching. No government backstop. No one to call when things go wrong. And this system manages $10 trillion. $10 trillion. That is larger than the entire GDP of China. Larger than the combined economies of Germany, Japan, and the United Kingdom. All of it completely invisible to the regulators supposed to protect you. So, how did it get this big? 2 reasons. First, interest rates. When central banks raised interest rates after 2022, traditional banks became more cautious. They stopped lending to risky borrowers. Those borrowers went somewhere else. They went to shadow banks. Second, regulation. After 2008, governments made traditional banking rules much stricter. Banks had to hold more capital, take less risk, be more careful. So the risky business moved out of banks and into the shadows, where nobody was watching. Section 2, The Architects of Risk. So who is actually running this? Not street criminals, not offshore gangsters. The biggest players in shadow banking are names you recognize: private equity firms, hedge funds, money market funds, insurance companies, pension funds, your pension fund. The retirement savings of millions of ordinary Americans are invested inside this unregulated shadow system. And they are chasing something dangerous. Returns, double-digit returns in a volatile market. To get those returns, shadow banks take risks that traditional banks are legally forbidden from taking. They lend to deep-sea mining operations, to sovereign debt restructuring deals in unstable countries, to high-risk tech infrastructure projects across emerging markets. Deals so risky no traditional bank would touch them, but shadow banks will. Because there is no rule saying they can't. And here is the twist nobody talks about. Traditional banks, the same ones regulated to avoid risk, are actually providing the money that shadow banks use to operate. Your bank funds the system it pretends doesn't exist. Section 3, The Hidden Engine. Here is why this matters to you personally. Shadow banks have become the primary source of credit for entire economies. Developing nations that traditional banks now consider too risky are being funded entirely by shadow lenders. Countries across Asia, Africa, Latin America, building roads, hospitals, tech infrastructure, all funded by unregulated shadow capital. And the global tech supply chain? The chips in your phone, the servers running your streaming services, the data centers powering artificial intelligence, all funded by shadow bank credit lines. If shadow banking freezes, the tech supply chain freezes with it. Your phone gets more expensive, your streaming service goes down, your AI tools stop working. This is not abstract. This is the physical infrastructure of your daily life sitting on a financial foundation with no safety net. And it gets worse because the money funding all of this is not locked in. It is short-term capital. Flighty money from retail investors and institutions that can be pulled out overnight. Long-term projects. Funded by overnight money. That is the definition of a ticking clock. Section 4, the domino now here is where it gets truly terrifying. Shadow banks are all connected through a web of derivative contracts so complex even the people inside them don't fully understand it. One default. One single company failing to repay a loan triggers a chain reaction. Company A defaults. Shadow Bank B loses money. Shadow Bank B pulls funding from Project C. Project C collapses. Shadow Bank D loses its collateral. Shadow Bank D calls in its loans. 5 companies fail overnight. 3 pension funds take losses. 2 emerging market economies lose their credit lines. Global markets notice. Panic begins. And here is the thing about panic in an unregulated system. There is no circuit breaker, no government fund to step in, no central bank backstop. In 2008, when the regulated banking system nearly collapsed, governments could step in. They had legal authority. They had tools. With shadow banking, they have neither. The Federal Reserve cannot legally bail out a private credit fund. The European Central Bank cannot rescue a hedge fund in the Cayman Islands. When this system breaks, the people supposed to save it are standing outside the building, watching. Section 5, the brink. So, what could trigger the collapse? 3 things are being watched very carefully right now. First, digital currency volatility. Massive shadow bank positions are tied to crypto and digital asset valuations. A sudden crash in digital currency markets could wipe out collateral across the entire system overnight. Second, geopolitical shock. A major conflict. A trade war escalation. A sovereign default. Any sudden geopolitical tremor could freeze the short-term capital markets that shadow banks depend on. Third, and most dangerous, a liquidity crisis. When too many investors try to pull their money out at the same time, shadow banks have nothing to sell fast enough to pay them back, because their assets are locked in long-term illiquid projects. That mismatch between short-term liabilities and long-term assets is the exact same trigger that caused the 2008 collapse, except this time it is $10 trillion, outside the reach of every regulator on Earth. And what can you do? 3 things. 1. Know where your pension is invested. Ask directly. Demand transparency. 2. Diversify. Do not put everything in systems you cannot see or understand. 3. Watch the signals. When credit markets freeze and borrowing costs spike suddenly, that is the warning. The system is telling you something. Listen, $10 trillion. Moving through a system with no rules. Funding the technology you use every day. The retirement savings you are counting on. The economies of billions of people around the world. All of it sitting on an invisible foundation that nobody is allowed to inspect. The 2008 financial crisis almost broke the world, and that was the regulated system. What happens when the unregulated one breaks? Nobody knows, because nobody is watching. Until now. If this changed how you see the financial system, like, subscribe, and share Behind Billions. Every week we pull back the curtain on the systems running your world without your permission. The next one is even darker.